Hello guys, welcome back. So today we're going to talk about the popular flagship, the ICT Silver Bullet. How do you trade the Silver Bullet? When do you anticipate it? When does it occur? How can you increase your chance of profitability trading the ICT Silver Bullet? We're going to talk about all of this in this video today. Now, first things you should consider is that what matters most is time and price. Time and price. So before we get down into this, wherever you are in the world watching this video, make sure you turn on your trading view time. You toggle your trading view time to New York time. You can find your trading view time on the right hand side of the chart like this. Click on it and then toggle it to New York. It doesn't matter where you are in the world, toggle it to New York. Now, that being said, we're going to use New York time as our time in everything we mentioned in this video. So now we have different times of the ICT Silver Bullet, but we're just going to focus on one today. The first ICT Silver Bullet time is that of the London session, which usually occur between 3 a.m. New York local time to 4 a.m. New York local time. Remember, the ICT Silver Bullet is usually a 1 hour trading time where you can trade a fair value gap between 1 hour window. Now we have the first one that comes between 3 a.m. to 4 a.m. London session, and then the next one comes New York session between 10 a.m. and 11 a.m., which we are going to talk about today, and then the final one comes around 2 to 3 p.m. New York local time every single day. Now in other videos we might talk about these other silver bullet, but for the one today we're going to talk about the AM session, which occurs between 10 a.m. and 11 a.m. New York local time. So here on my chart we have the ICT Silver Bullet, like I mentioned, between 10 a.m. Now look down here. 10 a.m. I have my horizontal line marked out to 11 a.m. So first things you should try doing every single day, you should mark out between 10 a.m. and 11 a.m. I don't know how you're going to do that. You might decide to use a vertical line like this, 10 and 11, and that's the first thing you're going to do. Now, before trading the silver bullet, there are a few things you should put in mind. What would increase your chances of being right? First off, you have to know your draw on liquidity. Draw on liquidity, when I mean draw on liquidity, it means where do you think price is going to? Where is price coming from? What has price done previously? So knowing the next draw on liquidity will likely increase your chance of winning a trade, regardless of the fact that the ICT Silver Bullet works a lot. Now, what is a silver bullet? A silver bullet is a fair value gap that occurs between a window between 10 a.m. and 11 a.m. New York local time. Like we said, we have different types of silver bullet, but we're talking about the one between 10 a.m. and 11 a.m. today. For example, we have a fair value gap here. Now, what is a fair value gap? A fair value gap, I want to put it in a very simple term so that those of us who have not heard anything about this can simply understand what it is. Imagine we have three candles here. Yeah, we have candle 1, candles 2, and candles 3. Now, candle 1 has a body, it has a wick and a close. Now look at the wick of candle 1 right here. Right here. Yes, this is the wick of candle 1. And then we have candle 3. This is the higher wick of candle 3. We can see that the wick of candle 3 does not overlap with the wick of candle 1. So there is a gap inside of this place, which I marked out with this rectangular tool. So this gap is what is referred to as a fair value gap. It's what ICT refers to as a fair value gap. Now, trading a fair value gap between the hours of 10 to 11 a.m. every single day, New York local time, can be very, very profitable. The question is, how do you do it? How do you increase your chances of being right? Because you can trade a fair value gap and be on the wrong side of the market, of the chart, and then you might end up smoking your account or getting some losses. This doesn't mean that you won't get some losses sometimes, but you have more wins than losses if you do this the right way. So what do you consider? The first thing you consider is time and price. Very important, time and price. What time are we talking about? We're talking about between the hours of 10 a.m. and 11 a.m. New York local time. The next thing we're considering is draw on liquidity. Where is price going to? Where do you think price is going to? Now, the issue or the concept of draw on liquidity is something that gives so many traders tough time. They find it difficult to know what draw of liquidity is. So we're going to limit this to a different video entirely where we discuss in details how to spot your draw on liquidity. But for the sake of this video, we have our draw on liquidity, which is right here, the sell side liquidity. We have a low here, so we already anticipated using a higher time frame to anticipate that price might be coming down to this low, or would likely be coming down to this low. Yes, so the sell side, which is this low, is our draw on liquidity. So first we have time and price, which is 10 a.m. to 11 a.m., and then we have draw on liquidity, and then we can then anticipate where we are going to have our silver bullet trade. Remember, we have some other little things behind this that will give us an institutional order flow. For example, the SMT, the smart money technique. We're going to talk about that in another video. So on this very day, which is last Friday, we have a trade. Yes, we have a low that was formed and then a higher high, and then we have price coming aggressively to attack the previous low, and that gives us a market structure shift. And then we immediately had a bearish bias. This, of course, is not part of things you should consider when doing the silver bullet trade. You can just only trade fair value gaps alone, but here we are having market structure shifts with which is the 2022 model, and then fair value gap. Here is the silver bullet trade, this one. So as we had our market structure shifts, we have price coming back to this fair value gap where we can readily sell. And then imagine being a seller right here on this candle as price is coming up. Why should we trust this? Because it is happening between the hours of 10 a.m. and 11 a.m. That's 1. We have a market structure shift, that is 2. We have a sell side liquidity right here, and that is 3. And then finally we have SMT. SMT means smart money technique. I will just quickly show you how this works. Maybe you can have an in-depth study on it. I'll make another video about SMT. Now, SMT means smart money technique. When we have different different markets like the indices, we have the E-mini S&P, we have the Nasdaq futures that moves in correlation. Once we have a particular pair or an asset that does something different with the other one in terms of higher high or lower low, we call that SMT. Now this is the E-mini S&P. It made a high and then a higher high around this same time. I'm going to show you what Nasdaq did around the same time. Let me show you. Look, we have a high, a higher high, and then we'll check out Nasdaq. Nasdaq made a high and a lower high at that same time. A high, a lower high. We have a high, a higher high. So this gives you confluences to take this particular trade and to trust it. So we now have our draw on liquidity on the downside, supported by an SMT, supported by a market structure shift, and then our ultimate flagship of the silver bullet trade, which is right here. This is our silver bullet right here on this trade. Silver bullet. Now you can trust it. You sell right away on this candle. And then imagine you missing this particular trade. Yes, can you be totally um, on the sidelines after this happens? Well, the answer is, as far as we haven't taken out this sell side, you still have an opportunity. You took this sell, you can offset some here on this low, some here on this low. It's not here yet. So we have it coming back to another fair value gap, which still has an order block. You can sell right here again, and then we have a position taken off here, attacking the sell side liquidity. So that's it, guys. That's how simple it is to take a silver bullet trade. Number one, have a draw on liquidity. Know where price is going. You have to know where price is going. Number two, it has to be a trade between 10 a.m. and 11 a.m. New York local time. And that's it. You necessarily do not need an SMT divergence to do this. And you necessarily do not need a market structure shift to do this. I might be doing more examples of silver bullet trades, and if you find this insightful and helpful, you might want to hit the like button and subscribe to this channel to encourage me to make more videos. I hope you find this very helpful, and until I talk to you next time, I wish you good luck and good trading.